Hello guys, glad to have you on board again today to terminate that week, heading into a crypto weekend. That will be an interesting one, so we're going to cover those up right away before getting into some swing reviews, because yesterday we had the Fed and obviously had some movements, and we're going to talk about a few scenarios on the dollar that might be about to trigger just today or eventually let's say at the end of that week. I expect this to kind of show some signs of potential reversal to avoid closing the weeks at the highest points. So we're going to cover this up right after, and then we're going to make the intraday reviews as we do, as we're supposed to do on those Fridays. So let's get it started. Crypto market is validating a potential reversal yesterday by that bearish engulfing structure that is confirmed right away today by breaking the lows of yesterday's candle. Oscillator is reversing to negative values, showing that the market is failing to swing out there to make a bullish swing. As we've made the bullish oscillation, the market is reversing. So as long as we remain above that market support, still shows high probability of the market keep on going higher. But the problem is, and we've been clear about that, it's really hard to play timing right now because the market is in the desert crossing phase. We expect the volatility to try to kind of expand in the near term right now, because we've been reaching out to the triangle's apex prices. The thing is that we're still right into the average prices of that range, meaning that as long as we stay in here, the desert crossing phase may take additional time to get out of here. We're supposed to get ourselves rejecting. Consider this like a magnet. First of all, the magnetic field is attracting prices toward the point of control, where you've got the most volume, the average traded price. Okay, prices are contracted by that area, and then now we start switching, which means at some point we're going to reverse that structure, which means the price will do anything it can to go outside of that average trading price. Going to search for new standards, and those new standards to me will probably in the end lead us to new higher prices. But it's a process that will take some time. There will be a switch at some point, and obviously I was forecasting the switch to be probably happening at the apex of those triangles. Apparently the market is deciding it otherwise. So facing that, you're not fighting the market once again, because when you speculate, the only thing you can never ever manage to handle is timing. So we might be just off timing right now if the market decides to go chasing below that low, or just returning to that low, not even necessarily making a lower low. The question is, as long as we still don't make higher high or lower low, we're in the fucking compression. So we're still in the desert crossing phase as long as the market didn't manage to break 6,700 or breaking 6,200. Okay, so just take that as it is. As long as we're between those two boundaries, nothing has changed. We had a potential timing. The market is showing that, no, we don't want it to be right now. So either this is just a pullback and we're going to start rising again and breaking the higher boundaries, or this is just fake timing. Those who bought are just getting out already. No one else is going to buy, and we're just going to keep on dying in that average pricing. That's an option. And so far, it's pretty damn hard to tell, because if that candle was about to close this way, it would be pretty negative outcome to expect. But if for some reasons we are rebouncing today, we're making a lower shadow candle and closing above 50% of yesterday's candle with a lower shadow, that will basically say, okay, you know what, we've been consolidating, we still have bulls in control, we're going to break that resistance. And I think if we do, next wave is probably going to lead us to break 6,700. So I still forecast that odds are still to the upside to me, but apparently right now prices need confirmation. So I'm just damn waiting, because that's all I have to do. All right. So that being said, goes the same for Ethereum and any other crypto market, because we're just waiting to be confirming that the market wants to get out of that price area, which is for now still very uncertain, because we just trod a rise, and in just a couple days we're back into those average prices. So that's for crypto market. Now switching to the dollar market and what the Fed's been doing yesterday. I think instead of looking at independent currencies and market and currency crosses, we're just gonna go to have a look at the DXY. That's how it goes. And I think first of all, I'm gonna delete that. This is the conclusion I've been coming to for different users, and I'm just gonna develop the arguments out there. So the thing is that we clearly have a breakup in here, so we're going to apply the strategy. Problem is sine wave is totally fucking out of synchronization in here. So this is where the breakup happened, okay, out of that level. So this is the level we've been breaking up. We take the lowest close and we report that range to the upside. It gives us the target to be right here. And I think this is what we're about to trade. So we're currently about to trade this, converging with a 76.4% retracement, and fuck it, I should have done that earlier. I should have done that. So that's a big mistake I've just done. All right, so we're already trading 76.4. And we're upper boundaries of that range. We're already overbought, so at that stage we've got everything we need to forecast that this market might be showing some reversal. We're at the top context, which means this is where we go. We've got the big resistance in here, meaning that we're searching for selling entries. We're at interesting reversal prices on the current on the technical framework. Okay, so this is context channel. When your upper boundaries, you're looking for sell. When your lower boundaries, you're looking for buy entries. And then you've got the short-term context, the local time frame framework that you will be trading on, and try to get as close as you can as the upper boundaries to sell, as close as you can to the lower boundaries to buy, and never ever buy on the 50% upward channel area, never sell on the 50% down part of the trend channel. Okay, so oh yes, and we're gonna make a quick pause right now just to talk about yesterday's. I've been uploading and upgrading momentum to version 1.4. Basically what it means is that right here, right now, you have momentum being version 1.4 in here. The addition you have is that when you go to the indicator setting on the inputs, you've got this. Now it's unchecked by default. Okay, but you can activate that. It's gonna show the indicator, the sine wave oscillator version right into momentum. So if you remember back then, I had pro momentum versus 1.3, and I had pro sine wave OSC added on overlay. So I had two indicators in the same spot. Right now, just one is taking care of the two. And that gives a pretty damn good edge for those who have non-paid plans into TradingView, because you're going to be limited to 3 indicators with a free plan. The thing is that as I will release the Pro framework as a standalone indicator, if you want to use it with a free plan on TradingView, you just can't use all of them, because you will have 4 indicators to plot with a 3 limit. So now I just upgraded this. So you guys, even with 3 plans on TradingView, will be able to use a momentum, a sine wave, and a framework indicator on a single chart, and have one of the best risk management you have available out there with just 3 indicators. You don't need to have 10 indicators, just 3 will do the job. Those 3 indicators are taking care of 3 different things. There are no correlation between them. Momentum has nothing to do with cycles. It's totally different type of analysis. And then you've got the chartist analysis, who's basically trying to replicate you tracing channels, but on an automatic way. Okay, so it is really 3 different things. This is taking care of chart analysis, technical analysis. This is taking care of cycle when it comes to sine wave, and this is taking care of momentum. 3 different types of seeing, 3 different ways of seeing the market. When the 3 of them are converging to the same conclusion that the market may reverse, you just limited the risk enough. It doesn't mean the market will reverse, just means that you've been limiting the risk of being wrong. And that's all we're doing here. We're speculating that the market may reverse. If it does, you take nice gains. If it doesn't, you're just wrong in timing and you'll try again the next time. All right? So anyway, DXI to me shows that we have high probability of a reversal in here. And then when it comes to this, you can add some spices to that analysis by just showing out how the waves, the sub-wave counts have been building themselves heading into, the structure to try to forecast what the next move should look like. And from what I can see, we've been going down in 2 waves, retracing in 2 waves as well, still not breaking the highs at that point, and still looking at a double bearish signal that we're currently having in a technical price area. So it's clearly a double signal out of the strategy we have in here. We have the sine wave resistance in there. We are at the upper boundaries of that trend channel. And we are looking for sell as the context is an interesting price area, an interesting selling price area. So we're looking at a double selling signal right in here. And if the market reverses, we're probably going to have to search for the lower boundaries of the framework channel, and then look for the major support in which we're going to handle the risk management. So you can consider this will keep on going that way. Okay, so in that area, we're going to look for support. We're going to look for buying entries. So selling, buying, after selling again is the plan to me. Okay, so I forecast the price as we've been moving it down in 2 waves that we're going to keep on doing that. This is what we call the leading diagonal structure, when you don't install the trend, but you are trending, which means we're going to make 3 sides to the downside, 3 sub waves to the downside, but we're not trending. You're not making 1, 2, 3, 4, 5 waves in those sub wave count. We're just going ABC, 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 showing signs that the market will retrace a lot. There will be a lot of swings to ups and downs, but we'll have more downs than ups, obviously. The thing is that this is bringing a long reversal. This is what we call leading diagonal, and psychology that is associated with that is generally that the subwaves that will, generally wave 2 that follows that, so it's going to be 1, 2, 3, 4, 5, every time with 2 waves to the downside. The wave 2 that will retrace generally doesn't retrace more than 61%, and the wave that follows is generally a huge trendy wave. This is what we call the extended wave count in Elliott wave strategy. Those extended wave will trend and obviously break major support. So if you zoom out, where the fuck is the major support? It's obviously there. So I suspect that we have very high probability that the next wave, if we do play it that way, and it's still very uncertain at that stage, but if we do it that way, and this is where we're going to make a lot of money by trading the dollar in that stage. So right now we're just piling up positions, speculative positions, to take some cash to prepare for the next trend that probably isn't going to take place until we reach out to 2019. So really be patient, but I still forecast this to play its game in the next following month, to see the dollar deteriorating slowly but steadily before installing a bearish trend. But first of all, we need to fuck up the bulls. The bulls have the strength right now. They are feeling the strength. They think they're strong, and I want to prove them wrong first, showing them that no, the dollar isn't that strong, and then, oh, fuck it, it might even be bearish. But it's still a process that needs some intermediate psychological effect. First, we need to fuck the bulls, and then to take the reverse, to reverse that trend. But we first of all need to reduce the confidence the bulls have into buying the dollar. And if I'm wrong, and if the bulls manage to break up that resistance, then we'll head up to the next speculative area that we've already highlighted. And we're just going to do nothing in between. If the market decides to go there, it means I'm just wrong in timing. That's part of speculation. I'm not going to fight. I'm just going to let it go and try again later. Okay, if we have a look in a weekly chart perspective, because we're closing a week, this is important. So I don't want the week to close like that. I really want us to make a pullback and to close lower today in terms of dollar. Because in that perspective, we've been breaking the previous week's low, which was already a doji candle, already signal a taking profit pattern. So momentum is okay with bearishness on the dollar. Okay, that's the thing. We're on a technical weekly price area. We've got bearish confirmation out of momentum, but the problem is this week's prices are not confirming it yet because it isn't closed yet. It will close later today, and I would pretty much like this to close negative because if it happens, then we'll have a pretty damn fucking selling signal for next week. All right, so that's it for the swing trades. That's basically all I have to change regarding the current scenarios. Is if the dollar triggers, basically I think this won't be happy reversal for the stock market. So bearish dollar wouldn't be great for stock market. Probably going to drag prices into the bond market instead. So we might have a safe haven demand, gold demand. Bond demand instead of buying stocks. So we should have more bearish breakdowns on stocks. We should have all the dollar pairs reversing. So euro dollar should gain some strength, GBP USD scenario as well. So all those scenarios could reach out to validation levels. But don't think that we're going to trend right now. The trends in euro dollar, GBP USD, USD JPY are not going to trigger right now. We're just going to reach out to the validation levels in which I'm going to take partial profits and take some gains to buy again on any pullback that we'll have heading into probably what's going to be next year's trends, but not right now, okay? We're just preparing for this. And the rest hasn't been moving at all. So we go for the intraday part. We're just going to apply the exact same strategy we did before. So we're going to... Oh, fuck it. What the hell is happening right here? I'd just like to have... I'm going to just load it again. So we're going to use the multi-chart setup just to make sure that we can, just as we've done previously, multiple options. When it comes to making intraday trades, you've got this option, which means you're going to take 2 or 3 assets that you're going to specifically choose because of their interest in terms of prices, which means you're going to look at the context channel in a 15-minute time frames. In a 15-minute time frame, and look out for those who are offering interesting prices to trade, and you're basically going to search for double bearish. So yesterday's plan did work pretty well, as yesterday the plan was to trade GBP USD or euro dollar or USD JPY. USD JPY hasn't worked at all. It didn't give a single bearish signal yesterday, so you had nothing to trade yesterday regarding USD JPY, but it's still available to trade today. And I think today is going to be an interesting day for that pair. On the opposite side, you've got GBP USD, who's been working pretty damn well yesterday. You had the double bearish in that area. So this is where you should have traded that yesterday. You should have traded in that area and took nice gains. Okay, as today we're reaching out to this and nearly reaching the target. So whenever you reach out the support area, make sure that you already took profits or you need to do that. But at that point, those who've been trading that area must be safely secured with break-even trades or paid stop losses, but you shouldn't be risking any kind of losses at that point. Those who've been taking the euro dollar as well are now obviously have to take profits. We already have the profit taking structure. It's confirmed by exits on momentum. We're on support area. Those who've been bearishly trading the euro dollar yesterday must get the fuck out of here right now. There's no more time to be bearish on euro dollar. It's time to rebuy your selling entries, but it's been working just fine. So you had double bearish right on the top, double bearish as well as a second signal in there. So you take your profits right now after those 2 selling entries. All right. So I think today's topic is to more likely selling the dollar, getting the hell out of euro dollar. You can even buy euro dollar if you want to. I would say the taking profit structure is not enough to buy, so I wouldn't buy right now. But I would say on going slightly lower, the euro dollar might be interesting. So probably more tomorrow or Monday to get into euro dollar and avoid getting in just right now. I would say just let it go with the GBP USD for slowly but steadily bearish prices. But we probably We'll do that next week. If we do that, and if it reverses bullish, you get the fuck out of here. I think the USD yen is probably, and I hope this one will show some strong reversal today, and I hope this will happen earlier to make sure that we're not closing at the high. I would like to have a strong reversal on USD/JPY because it will bring down the dollar index, and that's what I'd like to see. All right, gold isn't interesting today, might be, but probably next week when we reach out to that context support area. So everything suggests that there's going to be a swing regarding dollar. It's probably going to happen next week, but I would like to have early signals that we're not terminating the week at the highs in terms of dollars. When it comes to indices, we're still looking at the same. Yesterday's plan was to try to search for bearish entries on the SPX, which is in here as well. We had to search bearish entries on the Nasdaq and on the German index. It's been working just fine for the index, for the German index. Pretty nice bearish signal in here. Same goes for the Nasdaq. The SPX hasn't been that bearish, but I think today is showing some signs of weaknesses. So I would expect today to be kind of we retrace first and then we go bearish, kind of being today's motive. All right. So now we go use the other way. So we're going to take the German index as a standard today, and we're going to make the intraday trades out of this one. So it's one of the ones we can trade, but just as right now, I would be a little bit more cautious regarding DAX, as it has been showing some bearish signals, strong bearish trending signal, and the market is kind of trying to reverse out of them by profit-taking structure. When the market reverses out of profit-taking, generally means that we're building a range. So we clearly have the resistance to be there, where we installed the bearish trend. So I would say strong resistance. Oh, sorry, we already got that. We already got that. So I would say this is where you put your stop loss if you're a bear. Now the bulls have been building a support in here. So the question is this support going to hold? To me, it's just profit taking. So I would say the bears are not that strong, but I wouldn't say the bulls are at play. I would say this is clearly not going to show a bottom. It's just the bulls are showing that they're here, but we're probably going to have to buy lower prices. So I would say today, if you want to do something on the German index, make sure that the bulls will handle the bearish pressure that we had yesterday. But I suggest anyway, Wall Street's going to be bearish today. So I would say this is probably the next plan, okay? If you want to trade DAX. So I would say today, looking for selling entry. I don't know where. We could even try to chase the stop losses in here, trying to fuck up the bulls by going slightly higher. So I would say if you're bearish trading or today, don't be fearing. We're probably going to have better prices to sell. But right now, everything suggests we've been breaking down double bearish. So it clearly says, you can see in here we've got double bearish. Bearish confirmation. So we had double bearish signal in here, and the market is breaking them up. So it suggests we have a range. So I would say support, resistance. This is purely in uninteresting prices you have right now. So earlier today when I made the French review, I said probably we're going to trend. Okay, because everything suggested we were trending at that stage. But right now we've got clear odds that the market doesn't want to trend, which means no trend means that we need to apply the fucking range strategy. So I would say right now, the most probable scenario to trade is this. You put the fucking damn range strategy. We're right into the DOM zone, so you just don't get the fuck of trading out there. And you wait. We have another double bearish at the top of the DOM zone. So I would say kind of an interesting signal to take. So I would say this one is a signal you can take. Make sure you're not putting that much leverage because the stop loss has to be set up here. And I wouldn't necessarily put it right here. I would put it slightly more higher just to make sure you're not going to be taken down for stupid reasons. But I would say basically yes. In here you've got an interesting trades on a 1-to-1 ratio as a range trading. You sell in here, you profit taking in here, and if you want to spare 25 or 50% of that trade to try trading at lower prices afterwards, I think that's possible. But I would say right now, yes, if the candle closes like that, you still have 48 seconds to go in order to do so. But if it closes like that, I would say yes, that's a bearish trade entry. Applying the strategy in here, trying to sell at the DOMs on top. Even though knowing that probably the best and the best risk-reward ratios are above that price, but the market should maybe want to do that. Just have a look at the market profile. We clearly have a ranging area in here that's been rejected yesterday. I'll probably say that we're searching for resistance right now. If we do find it, we're going to build another range in that area. So I would say yes, kind of a bearish signal right now, if it keeps on following that way. As you can see, 4 seconds to go and the market didn't validate the signal. This is why you need to wait for candle closes. So signal is not yet validated. It could be on the next candle. That's no problem. The thing is that you need to wait for a bearish confirmation signal, or you just wait for the next technical area is going to be slightly higher than that. All right, so I would say more likely buying and selling today, as it seems not to be trending, but more likely to be ranging today. And I would say for those who want to buy, that's an option. But I would suggest, sorry about that, that you wait for the 15-minute time frame context support, which to me is a little bit lower. So I would say probably not today for a support area on the DAX, probably just on Monday, in which we can get that. That will also suggest that we might have some bullishness on the euro dollar. So to me right now, I would say, okay, wait for that price area to play its game. Make sure you're not putting a stop loss too close, not to get taken down by stupid trades, because the market could just try to trade stop losses in here. So don't put yourself too close from that area. I would even say slightly higher stop losses is necessary in here. I would say stop loss on that, above that volume area, so you have some protection. I would say in here, 11,560 for German index price is more than enough. But I would say more bearish today, obviously, and I don't think we're going to make lower lows than the current ones we've been doing. I would suggest that the taking profit reversal we have shows that the bears aren't that strong, so no trending, but probably a bearish range to come. So bearish range says you try to sell more than you try to buy, but you make sure you're not forgetting about buying yourself, about rebuying the positions when you are in support area. So don't forget to take the profits. That's all it says. Okay, you just don't let go with the positioning on a trending situation, as that taking profit reversal who's managed to break bearish signals suggest that the bears are not that much in control. All right, and please make sure you're not fucking trading into the dumb area, otherwise you and I are not friends. Taking a question right now, and then I wish you guys a great weekend. For the Wednesday educational session, can we put into the channel potential trades we want to take? Yes, obviously you can take trade IDs, no problem with that. That's the goal. The thing is just to make sure that whenever you're applying the strategy or already has applied the strategy, I'm gonna whether it's after or before pressing the button, all I care about is for you to put the process of applying the strategy into trading. And when you do this, sometimes you'll make mistakes. And what I want is to highlight those mistakes for you to make sure you're not making them again. And you're slightly but steadily going to get better each and every day by using, not each and every day, but each and every week, because you're going to learn out of your own mistakes if you're sharing your own graphics, or learning from someone else's mistakes. But generally, there's a trend out there that means that when you learn, you're generally making the same mistakes as others. Meaning that you just don't learn from your own mistakes. Obviously, you're going to learn better from the mistakes you've made. So sharing, as usual, and I stand on this, is the best way you're going to learn. By sharing your mistakes, not being ashamed of them, and quite the opposite, just going public with them and learning not to make them again. But you can also learn from someone else's mistakes. If you feel like you're too shy to share, or for some other reasons you just don't like to communicate and go public, you can even just learn from someone else's mistake. Because, as I said, generally you're all going to make the same mistakes. And Dimosimo is saying, thanks you all. On Wednesday we can talk about the 3676 algo. Have difficulty to choose right top and bottom for application on that instrument. So we're going to do it right away. We're not going to wait for next Wednesday to play that game. So we just made an application. So the thing is that this thing, the 2376 strategy, is the range strategy. It's the strategy you apply when the market doesn't know where to go. Because when the market doesn't know where to go, it means it doesn't trend. When the market isn't trending, it means generally it's going to range. When the market is lost, it's just like you. Take that picture. If you put yourself into a situation, meaning that you're in a place you just don't know anything about, everything is black, you have no light to see, first thing you're going to do is that you're going to get yourself searching for boundaries, okay? You're going to walk straight line until you find a wall. When you find that wall, you're going to go on the opposite side searching for the opposite wall. And it will give you some sense of what the room you might be into is looking like. You must, and sometimes you won't be into rooms, you'll be into corridors, meaning you just have two walls and a straight line to go between them. So the thing is that this is what we're trying to figure out. This is how the market behaves. When it's not trending, it's ranging, which means it's going to search for boundaries. And the only way you can trade that when the market itself doesn't know where to go is by searching for risk-reward ratio. As speculators, we don't know. Ranging is the worst case scenario for a speculator because it means even the market itself doesn't know what to do. So we trade risk-reward ratios, making sure that when we stand up for a trade, we're going to lose 1 to win 2 or 3, but no less than that, because otherwise it's not rewarding enough. And you're going to make sure that in the worst case scenario you can do that. You put the stop loss really further away and you risk a 1-to-1 ratio, but nevertheless never minimum than that. Because on ranges you just don't know, and when you don't know, all you can do is managing the risks. Alright, so the range strategy, when you do apply that, is when the market is failing to trend. Failing to trend means ranging is the most probable thing to come. Other thing you just might want to know is that in ranges, generally the market moves in two subwaves, meaning ABC structures. The way you can see that, I still think that we're bearish because we're moving 5 waves down. Okay, so 1, 2, 3, 4, 5 waves down and 2 waves up. Okay, 1, 2, up. Okay, it's meaning that we might be searching for a reversal in here or slightly higher, and it's probably going to lead us to 5 more bearish impulses. Okay, and then eventually we're going to get a reversal. Okay, so as for now, I suggest either the market will find some support in here and reverse bullish, or the market will break down that low and terminate the trend before reversing. Okay, that's many options, but I still suggest we might go pretty lower low from the current ones because just taking profit structure, we're rarely reversing at that stage. Okay, so generally 2 subwave counts into ranges is something that you might want to think useful when you do use trade them. And if the question really comes down to where to plot the tops and bottom, I would say even actually this is where you should have said put it that you just basically take the highest high who's been preceding the range structure, and you take the lowest low you've had in between. These are the 2 latest boundaries the market managed to find. In here we found strong selling demand. In here we found strong support. Unexpected support, but support indeed. So I would say that, okay, resistance seems to be there to me. This is where the bears are in control. So this is where you put the market top of your range. And this is the market bottom. All right, this is where probably the bulls have tried to put themselves ahead of trading. So suggesting what we have right now, it's not possible to take that trading signal. I made a quick mistake earlier. So you can take the bearish trade right now. You just have to wait for the price to go slightly higher. You're right into the down area. You're not trading that price area. Selling can be done here or here, but selling not in between. Okay, so you wait for the next bearish, double bearish signal to come. Trading right now is not an option. You're right into the down zone. All right? So you wait for this to play its game, and obviously next time we get ourselves into the blue area, you make sure you're handling your risk management, meaning you're lowering the stop losses or taking partial profit or whatever the fuck this is, and if the market managed to break through the blue. So, okay, other trick to handle ranges, because from time to time you'll be trending and you will applying the range strategy. So how do you know that the market is still trending? Generally, the thing is that when you're trending, you're generally retracing 50 to 61. It's between 38.2 and 61.8. Normally, when you're trending, you're rarely retracing more than that. So if you take the previous high to the current low, if you assess that 61% is in here, so that's the top of the down zone, if the market is swinging in there, is making two waves, swinging and breaking the blue area, means the market is still trending. Okay? Means that maybe you forecasted a range, but you're wrong. The market is proving you wrong, because anytime we retrace in two waves and find more bears than the bulls. And the bears are breaking the bulls' support. If that's what's about to come, then we're still trending and we're going to go lower. And generally, you go for the range. I give you tips. This is real fucking trader tips I'm giving you right here, not the bullshit that you're going to learn out there from all those fake traders trying to sell you fucking coachings. So when it comes to this, generally the market does that. Okay, you take the previous bottom, you take the highest close, and you report it to the downside, and generally you have the target for the extension the market will make. Okay? Other tip, generally another thing is that the market takes the previous range area and is trying to extend 127%. Okay? Fuck it, on the opposite side. That's not what I want. So the market will do this. All right, that's what I do. Okay? Generally the market will try to trigger this. So these are the two options you have. Either you trigger the range no, and that's not exactly how you do this. You're not taking the previous low. You're waiting for the market to go there, trying to build a rebound. Normally the market will try to build a support in that area. You can see it. Generally the market will do a sub wave 1. So let me just delete that. Generally, if we reverse, the market will try to do something like that. Testing back the dust area again, the trend lines will block the price once again and break down. Okay, and then this is where you build yourself the range. You take the highest close, you take this, okay, and you report that to the downside, and you'll get the target. And generally, that leads to the same price area of this. Okay, so you can expect that to go a little bit lower, and this will just give us the same price area. Normally, this is where the market will buy itself out. And as we just have taken profit in here, I suggest if we go there, I will not be selling again, and probably even trying to buy the DAX. Okay, but that's part of the plan we've set on the 15-minute time frame. I suggest we're going to do this, but probably not necessarily today. I think today we're going to range in that price area and eventually break down because of the US session. But if we get to that area, probably is going to be a buy signal to me for the German DAX. All right. So make sure you're not too aggressive right now. Really, really don't be. It will be stupid to do that. But I think we can make and expect some more bearishness, to maintain pressure to the downside heading in the next few days. All right. So I think we said it all. So I'm going to leave you guys with that. As a conclusion, remind that for the crypto traders, this weekend is going to be interesting some way. If it is, it means that we can expect some bullish reactivation signal along the weekend. If it doesn't, and if we stay there for more days ahead, just basically said that we're still into the desert crossing phase, and that the timing was wrong, and the market would just keep on dying in here for additional 1 to 2 weeks before eventually trying again to restore volatility. It's a process that will take that will show up, but the problem is you just don't know when, and we're trying to speculate potential timing of reactivation. But as long as we haven't been proven right, you just can't confirm that the speculative scenarios will validate. So wish you a good weekend and see you on Monday.